Hey, welcome to the 40 Finance channel, everybody. Today I picked out an interesting article that I recently read on Seeking Alpha, and you can see the headline right here. Microsoft stock is now becoming dead money, rating downgrade. So this is, obviously eye-catching because you don't see a lot of people who would say Microsoft stock is dead money, particularly in this new generation of cloud and AI enhancements that are going on. However, to be fair, it's good to read a whole bunch of different opinions to make your own. So I'll dig into this with you here on Seeking Alpha and share, maybe some counterpoints to what this gentleman is saying. Now, if you like this kind of stuff, obviously like, subscribe, all the things. And you'll get a nice little preview here of what's going on Seeking Alpha these days. This is a platform I've been promoting for a long time. Got a great sale going on right now with Black Friday. I'll leave a link in the description and you can check that out. All right, so we talked about the headline, and I think what's really interesting, what really caught my attention here is this analyst rating. When they wrote this article, it's sell. So you're not talking about holding, you're not talking about long-term investment, you're talking about sell Microsoft stock is the recommendation here, which quite honestly, you just don't see that very often out of the big, FANG, Magnificent Seven stocks, anything like that. But let's go through the thought process. And there's a whole bunch to these articles. And to be fair, when I say analyst articles, it's really not that much different in many cases than, you and I doing stock analysis. Now, there are people on Seeking Alpha have huge followings who are media contributors, etc. But it is an open platform in the sense that, anyone who wants to take the time to do deep analysis like this, and almost all of the articles you read on the analysis column in Seeking Alpha, they are deep dives, okay? So people really come in and try to support their point. For purposes of time, we are just going to cover the summary documents, or the summary points, so that I can give you my opinion as well. All right, so bottom line, Microsoft stock has surged 25% since mid last year. To be fair, this was published on November 11th. I'm making this video exactly 10 days later, but there hasn't been a whole ton of movement here. But Microsoft stock has surged over 25% since mid last year, now presents an unfavorable risk-reward setup. Unfavorable, and again, he says, making it a sell recommendation, and that's what really caught my eye. Daily technicals show mixed signals, near-term bullishness, but significant resistance. We don't talk a lot about technical analysis on this channel, so I'm just going to assume that is correct, because we're kind of looking more for fundamental analysis in terms of what I talk about in long-term investing. Fundamentals. All right, so now I'm interested. Fundamentals reveal resilient but unremarkable growth, a high PE ratio suggesting overvaluation, and a price to sales ratio that indicates a fairer valuation. And then lastly, despite recent earnings, Microsoft growth prospects do not justify its current valuation, once again prompting a sell recommendation. So here we are, November 21st. This article, when it was published, Bay Area Ideas is selling. Price at the publication of the article, which it's really cool Seeking Alpha does this, was $422.52. Today we are at $413. Okay, so it's down 2.75%, but we are talking about selling here. So the initial reaction, if you will, since this is published, has fallen in favor of Bay Area Ideas. But again, I think with a stock like Microsoft, the game's in the long term. But let's take a look at these points one by one. I'm going to switch over here to the stock chart. And Microsoft right now, because I didn't refresh that previous screen, is at 414. If you go simply off Seeking Alpha quant ratings, they're giving it a hold with a devaluation. And you can see how those quant ratings change over time. That's obviously an algorithm. But for now, let's just focus on Microsoft stock. And for that, I am going to go to the valuation metrics. All right, so we talked about Bay Area Ideas, talked about the fact that the PE ratio is at an unfavorable point, prompting a sale. And if we look down here and we're looking for forward, right, we're always looking ahead. So to be fair with this particular analysis, it's talking about selling today because tomorrow is going to be worse. The gap forward PE ratio sits at 31.75. Okay, the current gap trailing 12 months is at 34. Obviously, the market always looks ahead. And what's interesting here is the sector median, which I don't have all the names memorized in this particular sector for Microsoft, but it's 8% over the sector median as of now. But on the 5-year average, the 5-year average of forward gap PE for Microsoft, it's basically flat, right? 31.75 to 31.55. That's a difference in the 5-year average of 0.61. So if we're just talking PE for a second, I'm going to say I don't see the overvaluation. All right, so next let's talk about sales, right? Price to sales. How are sales going to go in the future with all these new technological advances that are out there? Price to sales trailing 12 months is 12.15. Sector median is 3. 5-year average for Microsoft is 5.31, or excuse me, is 11.54, which is over 5% above the 5-year average. So price to sales running hot in the trailing 12 months, but in the forward 12 months, we've got 11.09 to 10.69 for the 5-year average, 3.69%. So it is running slightly hotter there. What's interesting though, if you go back to the article, there's a point here that the price to sales ratio indicates fair valuation. I would argue that, granted it's nickels and dimes, but I would argue and say, you know, oddly, the PE ratio, the forward PE ratio is actually less expensive compared to the 5-year average than the price to sales ratio. All right, the next point on here, Microsoft's growth prospects do not justify its current valuation. So let's talk about growth a little bit. And we'll go up here to the growth metrics. And revenue growth year over year, 16%. Revenue growth forward, not projected to be as high, but you're still in double digits, right? You're still plus 14% is the projection. And compared to the 5-year average, which is 13% on the 5-year average, that's plus 10%. Now that's looking ahead. That's based on consensus projections. So as I've certainly learned over the years, consensus projections are not necessarily facts. They can go a lot of different ways. But if you are unimpressed by this revenue growth, I would say if you go back in history, from a 5-year average perspective, gosh, it looks right on par to me. Okay, what about EPS growth? Let's take a look at EPS gap growth year over year, 21%. Looking ahead, it does slow, 16%. You're still in double digits, is the argument that I would make there. You're still in double digits. And similar here on the EBITDA side, if you get into EBITDA, 25% year over year, looking at a potential of 18%. Both of those are over the 5-year average. All right, last thing here, let's look at the earnings summary. We're just going to project ahead to the future, skip the past because we already know that. The upcoming quarter's earnings are going to be released on approximately January 23rd. The normalized estimate right now is 316. Between 314 and 316 is what I would say. $68 billion, basically $69 billion on the revenue estimate. So you're talking about a company that makes, $69 billion per quarter, that's growing at a double-digit pace, all right? And you're a little worried about a valuation that is well within range of the 5-year average, which the 5-year average goes back to 2019. All right, so 5-year average, you've got the COVID ups and downs and all the different things with interest rates incorporated in there. Gosh, it's hard to find a company that can generate this kind of money and grow double-digit percent. It's not easy to grow double digits when you're working at this insane level of revenue. Now, the EPS revisions, so what analysts have looked at and the analysis they've done off of the last quarter's earnings, you've got only 3 have raised, 26 have lowered. So they've lowered, and that's what gets you down to this 314 number. So the revision grade C minus, if you're just going off Seeking Alpha. But if we look at EPS surprise by quarter, a couple things that stand out to me as it pertains to selling Microsoft is you have a bar chart that's going up, right? And the projected quarters coming up, maybe a little soft here. The consensus is 315, and the actual last quarter was $3.30. Now they beat that by 20 cents. So you could see something, if the analysts' consensus are correct, you would be looking at a negative quarter for Microsoft in terms of what they did the quarter before. However, if you go out and you see what we're looking at over the years, the forward quarters, you still have lots of growth built into this just on the earnings side. And if we look at it in a table view, June of 2025, EPS estimate 1309, forward PE of 3174. And then price to sales wise, June of 2025, you had an 11. If they hit this number, 278 billion, and if they hit their 2026 number, so if you're buying for the long term and you expect to hold it in June of 2026, you got a price to sales ratio that's under 10. So again, long-term investing starts to pay off with a lot of these stocks, and that's what confuses me about any recommendation to sell something like Microsoft. All right, guys, so that's my reaction to Microsoft stock becoming dead money and getting a sell recommendation from this one particular analyst on Seeking Alpha. I don't see it. Doesn't mean it won't turn out to be correct, but it surprised me enough that I had to look at the numbers, and when I looked at the numbers, I don't see the same thing. All right, guys, let me know what you think about Microsoft stock potentially being dead money and getting a sell recommendation from at least one person. And if you like what you saw here on Seeking Alpha with some of these features, definitely check out the promotion link in the description. Helps support my channel. You also get a free trial on the front end. So it's a really good deal. You'll see a lot more of it on my channel as well. Hope everybody's doing good. We'll see you on the next video.